Roblox and video game development software maker Unity are both having huge months. They're up 60% and 40% respectively, and the metaverse is showing no signs of slowing. Nike making a big push with the launch of Nikeland on Roblox. Is this a smart strategic move for Nike or just a big publicity stunt? Joining me now is Americus Reed, professor of marketing at the Wharton School of Business and our newest CNBC contributor. Welcome to you.
That's very nice to be here. It's great to be with you, Kelly.
It's great to have you. So I'm trying to imagine what possible downsides there would be unless financially investors got worried they were just going to put a ton of money in this space. But again, if this is the future, then why not invest there?
I agree with that 100%, Kelly. And I think you got to give Nike credit here because they're always on the bleeding edge of trying to create deep connections with their consumers. So Nike is understanding that what we need to do is we need to make sure that we don't miss this train and that we are able to create those connections and start creating loyalty and familiarity at a younger age.
America's 67% of Roblox users are under the age of 16. It's where the young consumers can don their Nikes in the virtual world, share, interact, commiserate, whatever it is, a natural gateway that creates that brand loyalty from a very young age. So I wonder how much you are nerding out on the metaverse and on Web3 and crypto and all of these things that are going to be the important building blocks of these future worlds.
It's a very bold marketing move, but if you think about what Nike does, Kelly, Nike is known for making these kinds of big bets, right? Colin Kaepernick, we believe he's going to be the next younger generation's Muhammad Ali. So we're going to bet on that. These are the kinds of things that Nike does. And so this is just basically an extension of who they are as a brand. And so you're 100% correct. I mean, I'm a digital immigrant, so I'm just trying to figure out TikTok. I'm worried about crypto next week and NFTs and all this kind of stuff. But Nike understands that if we can put the sneakers on you at a young age, virtually, when you're an avatar and you're in this metaverse and you're creating your own identity and your identity is forming, then what we're essentially doing is we're already building the kind of familiarity that's going to create a connection to you as a younger consumer. And what's going to happen in that virtual metaverse, Kelly, exactly like you're saying, is going to have a more higher probabilistic likelihood of occurring in the real world because of this investment that Nike's putting forth.
A lot of us in New York are hoping that Okta wins over CEOs because what you just described means that we probably would get an hour, maybe an hour and a half back of our day that we feel is being stolen from us by this process.
One of the challenges with identity technology and talking about this vision is sometimes it's hard to imagine. I talk about things like integrating the technology and connecting and having this central policy engine. But if you're running a company, you know that you have to get security right. You know you have to connect with your customers. You know you have to have easy technologies and tools for your employees to be productive. But it's not always clear how identity fits into that. So what we want to do is we want to build out a space in the Flatiron District of New York that helps executives see that.
Am I correct in believing that even though you're growing at north of 50%, you're one of the fastest growers in the world, that the number of companies, enterprises that use Okta is a fraction of what needs Okta?
The opportunity is big. We have about 13,000 companies as customers now, and there are many, many more organizations than that in the world. So the opportunity is massive. In fact, we think this total addressable market is $80 billion. So the more cloud technology, we're a native built identity platform in the cloud. So the more cloud adoption, the better we fit into that. And that really showcases our industry leading network of 7,000 plus integrations, all connected, all maintained, all secure.
When you look at the names that have outperformed so significantly year to date, whether it's an NVIDIA, whether it's an Arista, what's common between those names? It's the craze for metaverse is taking over all of my investor conversations. So when you look at, Facebook is increasing their capital expenditures into next year by a whopping 70% to almost $34 billion at the high end. Facebook is going to spend more in CapEx.
This is interesting to me because I don't know. I'm sure you talk to a lot of very smart people. I know that I talk to tons of smart people that are much smarter than I am. And it's almost evenly split, Jared, between those who really believe that the metaverse will be a massive part of the technology future and those who are really skeptical about whether or not this thing is really going to take shape. Where do you fall on that? And will it be the biggest investing theme in technology in, say, the next 5 to 10 years?
I think it is. I mean, Zuckerberg is creating, at Facebook, is creating an entire separate segment of the company called Facebook Reality Labs. And he's committed to investing billions of infrastructure, and he's not looking to monetize this until potentially the end of the decade. But, you've got two of the largest tech titans within MFANG endorsing the concept of the metaverse, and they're spending billions in infrastructure to facilitate it. Obviously, Microsoft has Azure on the back end to go ahead and leverage their infrastructure. I think we're going to continue to see the same.
I would also like to kind of tilt a little bit away from the metaverse because we know what's going on there and that the upside momentum is there. I had mentioned some of the big payments providers and payments networks as being extreme underperformers over the course of 2021. Is there a value trade to be had for some of those payment companies in your mind?
The market is essentially on all-time highs, and many within fintech names that you highlighted, they're underperforming with significant multiple compression across the board. And to see that in the context of, Visa making new lows, GPN making new lows, where cross-border activity is a tremendous tailwind for Visa, it's not intuitive at all. So that goes to the question, what's actually pressuring these stocks? From a merchant acquirer standpoint, so whether it's GPN, FIS, or FISV, you have concern that some of these new rails, such as Square and Adyen, are disrupting the ecosystem. And then from a PayPal perspective, like you were talking about earlier, you had a disappointing guide into calendar 2022, and investors are certainly rattled that there's going to be continued M&A. Obviously, there were press reports that they were looking at Pinterest, and I think the strategic rationale of that deal was certainly not received well by the investment community.
You guys ready?
It all started with a Marshmallow concert. It was an interactive virtual event that took place within the popular video game Fortnite. Metaverse, the word that's been popping up everywhere recently, is a virtual community. And within that community, people can play games, work, or in this case, attend a concert. Fortnite's concert was a huge success. Nearly 11 million people live-streamed the event, and today, that number is north of 60 million on YouTube. Travis Scott's show proved how profitable these virtual concerts could be. And just like real-life concerts, there's merchandise to be sold. Lots of it. In addition to the physical merch, players can also purchase skins and emotes, which are dance moves and other actions your character can perform within the game. Scott reportedly grossed $20 million from his Fortnite collaboration, including merchandise sales. Following Fortnite's success, other companies like Pokemon have followed suit, creating a virtual concert for its 25th anniversary with Post Malone in February. Ariana Grande hosted a virtual concert and is reportedly set to make the same amount as Travis Scott. Justin Bieber is the latest pop star to announce a concert in the metaverse space, partnering with virtual entertainment company Wave. Wave's virtual concerts will be performed live, unlike Fortnite shows, and people will be able to send emotes that the performer can see in real time. It will be interesting to watch the evolution of these virtual concerts and the revenue they generate for the companies and the artists that partner with them.
You've probably seen this image before. Everyday's The First 5,000 Days, created by Beeple. In March, it made headlines after it fetched nearly $70 million at a sale by Christie's. It was the first time a major auction house sold a digital artwork. Behind the purchase was an Indian cryptocurrency investor known as Meta Kovan. Meta Kovan's real name is Vignesh Sundaresan. Over the past year, he's become the top spender in the hottest area among crypto investors.
I've been a crypto native since 2013, right? And I've been lucky to be part of various projects that, blossomed, including Ethereum.
Since 2019, he's gone on a virtual spending spree in the emerging NFT market and snapped up hundreds of acres of digital land in online worlds like Decentraland.
Long term, I've invested in many technologies, right? Like including Decentraland and anything that excites me, and I think it's bringing more people into the industry. I usually try to be part of those, either the seed or the early stages of those. So definitely my Ethereum has never just remained as Ethereum. It has gone into other communities also.
The cryptocurrency kings who've created fortunes out of sight of financial regulators. Their true net worth is obscure because their assets exist mostly in the semi-anonymous blockchain. When asked about his current net worth, Sundaresan said he was not comfortable disclosing it.
I really don't think it makes sense for me to give you a dollar amount, and it's not something I'm comfortable just disclosing.
Some regulators have warned of the dangers of the new markets, noting fraud and scams are a risk. For now, with little government supervision or legal recourse, regulators say crypto investors accept a significant risk of losses in any project.